Hey guys, my name is Shivang Goyal and in this video we'll be talking about IPO. The purpose of IPO. I'll be telling you about the whole IPO thing, how it works in the stock market, why do people buy IPO. I'll be telling you all this thing in a very simplified view. So please watch this video starting to the end. I'm damn sure you're gonna love this. Start. So the very first question, what is IPO? IPO is basically initial public offer. When a company offers shares to the public for the very first time. Yes, for the very first time. That's why it's called as initial public offer. It also helps company to raise the capital amount from public investors. While talking about the purpose of IPO, it's pretty simple actually. First, it can be they want to increase their working capital amount for basically for the day-to-day running of the business. They want to repay their loans. And the third, it can be they want to expand their business. They want to expand their business empire. And now we'll be talking about how does the IPO thing works in the stock market and why do people buy IPO. Let's imagine you're going to start your own company and you don't have working capital for it. Basically, you don't have money for it. So what will you do in that case? I'll be telling you. Let's start. So first, you need to advertise your company to the big investors. If those investors think that your product, your company is up to the mark, you have the capabilities of reaching at the top, then they will going to invest in your company. From there, you will get the first crack at investing. From there, you will sponsor the company's IPO onto the stock market. Once your company is registered onto the stock market, any individual or any company who believes that your business could be profitable might buy a stock. After buying the shares, this will make the investors be the partial owners of your company. Their investment will help the company to grow. As the company will become more successful, more buyers may see potential in buying the stocks of the company. We can also say as the demand will increase, the stock price will increase. Basically, demand is directly proportional to the stock price of the company. It will also help the previous investors who have already invested their money in your stocks. However, for some reason, if your company seems to be less profitable now, it can change the game the other way around. After this, the investors will start selling off their stocks as they think the stock price will keep on declining continuously. This will result in loss of demand, which will result in loss of stock prices. This can lead investors with big losses until unless the company looks or starts profitable again. Hey guys, thank you very much for watching this entire video. If this video came out to be a bit helpful for you in some or the other way, then please do like, comment and subscribe to my YouTube channel. Thank you very much. See you in the next video. Bye bye.